Positive Business Talk.
Welcome back to the Experience Pros Radio Show, home of Positive Business Talk. Thank you for tuning in and participating. We love it when you do. Angel, I know this probably doesn't affect you, but there are a lot of people in business who allow their business to overcome their financial stability and end up in a situation with bad credit.
Well, yeah, I'm sure they use their personal loan, personal credit,
Right.
personal stuff to fund a business and to get started, to give your business a startup loan in the beginning. You know, you might pull from a 401k, you might pull from a line of credit or something to give you that seed capital to
Right.
get yourself started. But you get yourself, and it's not hard to get yourself into a little hot water when it comes to credit.
It's true.
It's so easy. Yeah, it's so easy to get yourself into hot water. And then once you're there, it just seems as if everything is stacked against you to get out.
Well, we got here as quickly as we could, folks. We took a look at a website called quickanddirtytips.com.
Can you bring this to the radio?
I think we can.
Now I know what you look up on the internet.
Quickanddirtytips.com.
Of course, we've already known that about Eric
This
already.
is the subdirectory of money and finance, specifically dealing with credit, and 5 ways to get a loan with bad credit.
If you have bad credit, people still give you money.
Oh, well,
This is one of those things. I went to the Dave Ramsey School of Get Out of Debt, and he talks about loaning money to friends and family.
Yep.
And he
says, don't do that.
If the bank won't give them money, if the institutions that this is their business is to determine whether or not this person will pay you back, if they said no, what are you thinking?
Right. Well, we're not necessarily endorsing any of these. We are just simply saying if you need credit when your credit is bad, if you need money, a loan when your credit is bad, there are, according to the money girl, Laura Adams, 5 ways. Let's talk about them.
Okay. All right. Here we go.
Number 1, use a home equity line of credit. If you've got enough equity in your property, you could get a low interest tax deductible line of credit to spend on any way that you like.
Yeah, but don't they? I mean, isn't it still a loan you're applying for?
Oh, yes.
Oh,
It's a loan.
Yeah, but you're applying for, and so even with bad credit, they'll let you take your line of credit.
What are they
line of
putting
equity?
as collateral?
Oh, your house.
Your house.
Oh, that's a biggie. It's
kind
probably the
of-
only thing you have, right?
Right.
Okay. All right.
So-
right.
so-
It's a little risky, but okay. Okay. All right. We didn't say they were, I mean, it's not magical
The
options.
website we're getting this from is called quickanddirtytips.com.
There you go. All right. All right. So if you want to get a loan, you got some bad credit. Option number 2, according to Money Gal Laura Adams, she says apply to credit unions.
Credit unions are similar to banks, but they're owned by their members who typically have something in common, like working in the same industry or living in the same geographic area. Credit unions are nonprofit organizations that pass along their earnings to members, and you sometimes find that it is easier to get a loan with a credit union because if you're a part of the credit union, you're part of the membership.
Yeah,
or the ownership.
part of membership. And so, applying, having an account at your local credit union, find a creditunion.com. That's a website to locate a credit union near you, also to discuss getting a personal loan. They also recommend comparing loans so that you're getting the lowest interest rate possible before you sign the final paperwork. I think so often, especially if you're in a situation where you have bad credit and you're just anxious for anybody to give you money,
Right.
that you might not be as concerned about the final details, the little details, such as the interest rate and the fees, but you should be. You should be.
You should be.
Pay close attention and compare. I also know that, we get nervous about going to multiple institutions because we don't want multiple people pulling up our credit report because that dings our credit as well.
When you get a hard credit inquiry, it does ding. It's typically temporary. They do fade after time. Here's a way to avoid that, and that is a peer-to-peer, or as I like to say, PP.
A PP,
a PP loan.
What?
P2P loan has been around. P2P or peer-to-peer lending has been around since 2005. It's actually a legitimate thing. It's not going to your Uncle Sam or your neighbor Joe unless your neighbor Joe has an actual business set up for this.
Oh, so it's not asking your brother-in-law or your cousin or your uncle,
no, it's
right?
an online platform that allows you to borrow directly from an individual instead of an institution. So there are rules, right? And those rules are set up, but it's kind of like a wedding. Do you? I do. Do you? I do.
Almost like crowdfunding, right?
Very much like that.
She says borrowers post a loan listing that includes the amount they want and why they want it.
Yep.
Investors review it, choose the ones that meet their criteria. They screen their applicants, check your credit, becomes part of your loan listing. And so while your credit score is still a factor, an individual investor may be more empathetic to your situation than a traditional bank.
Interestingly enough, I saw this in the ride-sharing space as well. My neighbor who drives for one of the ride-sharing companies, he was out yesterday polishing a new car. And I said, did you get yourself a new car? And he says, no, I've had this for about 3-4 months now. He says, this is the car that I loan. He parks it at the airport and uses an app to loan out his car for $300 a week.
Okay.
And if you don't want to go through the Hertz or the other, the car rental programs, he rents it out that way.
It's like, you can rent anything. Anything these days.
Yeah.
And less traditional means are, more creative means are so available. And so most of the financial institutions, and you've seen this, in the years past, that getting a small business loan and getting banks to want to loan out money, we've heard a lot of banks say there's plenty of money and there's plenty of loans. And then you hear the opposite side of it from the entrepreneurs saying,
you can't get to it.
I can't get it.
Yeah, because I can't prove that I'm going to be viable.
And so there's two stories going there. We know that, when you're starting up a business, when you're building a business, you're pouring everything back into growing that business,
right.
Operation costs and capital and inventory and employees and marketing and advertising. So much is going into it. And you're not always seeing a great profit margin,
right.
Happening, at the end of the month, quarter, or year. And so sometimes, a small business loan is necessary. And if you can't use it from the banks, and these ones are saying if you've got bad credit, and I think a small business often isn't necessarily dealing with bad credit. They don't have any credit yet established.
Yeah, there's good stuff there. Great book. If you're interested, Steve Replin wrote a book called Where to Go When the Bank Says No. You might look there. Hard money lending is a thing. Gang, we're going to take a quick break, but when we come back after the top of the news, more positive business talk. You're listening to Angel Tussey and Eric Kramer. This is the Experience Pros Radio Network.
The Experience Pros, revolutionizing the way people treat people in business.